Good morning, good afternoon, good evening, wherever you are joining us. Welcome to another episode of Wealth Building Conference. I'm your regular host, Oludare Fasola. Tonight, we're going to be looking into another topic. But before we go into that, just the usual way of welcoming ourselves, wherever you are joining us, I want you to please help me to put in the comment sections your name and where you are joining from. All right. Again, if you know anybody who is looking to to save on taxes, whether is a business owner or immigrant or any part of the world, please send a link to them. Let us join in on so that we can learn together and see how we can save on taxes legally. On my experience in this industry is that I know one of the biggest destroyers of wealth is taxes, right? And if you don't know how to manage your taxes, it's going to be very, very difficult for you to build wealth. And that's why we're talking about this every time. I used to say this every time that I don't have any problem in paying taxes, right? Of course, in this part of the world, tax is one of the important things because you can go out, you see the good roads, you see the electricity, everything, the social infrastructure is there. So all this thing is being funded by the taxes that we individuals are paying. But what I also want to let everybody know is that if there is a legal way of saving on taxes, I want you to really explore that. It's not a tax evasion, right? It's not a tax evasion. So if you understand how to save on taxes, right? Honestly speaking, it will be very, very easy for you to build wealth, right? So, and that's why I want to talk about this today. But before we go into that, we're almost at the end of the year. This is the month of October. Just 2 months to the end of the year. So I just want to ask you, what is your goal this year? Did you reflect back and ask yourself things that I've actually, asked myself that I'm going to do this year? Have you been able to do that, right? If you are falling behind your goal, it is the time for you to sit down and ask yourself that real question, right? And if for some reasons you are falling behind, you can still go back, re-strategize and reset the goal. The 2 months can still you can still do very, very reasonable thing. But I want you to know that it's very important that you set a clear and attainable goals. A lot of us set goals, but for some reasons we set a goal that is not unachievable. All right. So I just want you to know that please, if you are falling behind your goals, it's not bad. Go back and see what is actually making you to fall behind, and if there are obstacles, if there are challenges, figure it out and see how you can also move forward with your life. So once again, I want to welcome everybody. For those of us who have been joining us for months that we started this program, on behalf of myself and the Wealth Building Conference team, I want to appreciate your time. We value your time, and I want to tell you tonight that you're going to have value for your time again, right? If you are a medical professional and you are looking or interested in financial success, my QR code is just on the screen right now. You can book a call and let's see how you can help you to save on taxes, build wealth, and help you build lasting legacy. All right. So on that note, I'm going to quickly pull up my slide and we go into the presentation. So tonight we're going to be looking at important topic. But before we go into that, I want to make an important disclaimer. This presentation is educational purposes only and does not constitute tax or legal advice. Always consult a licensed accountant or tax professional before making financial decision. Example use are illustratives and may vary based on your province and unique financial situation. So please take note of that. Now, let's look at the topic today. Doctors and taxes 2025. Keep more of your income legally. Um, Doctors and taxes in 2025. Keep more of your income legally. This is the smart wealth strategies for Canadians medical professionals. I want to let you know this, right? There was a particular time I went to one of my clients' office, and I got there and he said, Oludare, I don't like today at all because I just pay CRA, right? And it's not like paying that taxes is what he doesn't like, but he felt I could save more on taxes than what I'm paying right now. And I told him that day that, look, doctor, you can actually save more of your income, and we put strategies in place. And I ask and I tell him that, look, please, at the end of the year, please check what you're going to pay this year and compare it with what you are paying before. A lot of us are leaving money on the table for CRA, right? It's not your fault. It's because of lack of financial education. I understand that you are a busy medical professionals. You take care of patients. You are very busy. I've seen an average medical professional is a workaholic. So it's not that, it's good to work, but it's not about working hard, but working smart and keep more of what you earn. And I'm going to show you how you can do that legally, right? Like I said, it's not a problem. I don't have any problem in paying taxes, but if I have opportunity of saving on taxes, I'm going to explore that. Now let's look at the problem. Why do you think doctors pay too much taxes? Right? Why do have you asked yourself that this question? Why doctors pay too much taxes? Canadian doctors face tax rate as high as 53% on their income. Trust me, you as a medical professional, you could pay up to 53% in taxes. So meaning that if care is not taken, whatever you make in a year, you could pay more than half of that if you don't have proper plan in place. And I'm saying this because I've seen many medical professionals leave money on the table because of the fact that they don't have enough financial education. One thing they don't teach you when you go to medical school is that they don't teach you how to, you know, um, how to make money, or they don't teach you how money works. Let me put it that way, right? Even the professor of finance, they don't teach them how money works. Okay, you learn that through financial education, and it's a very big problem, especially if you are in this part of the world, right? You are in United States, you are in UK, you are in Canada, you are in France, any part of the world, right? One thing that you cannot joke with is taxes, right? It's a very big deal. All right. Of course, they won't tell you that this is how to save on taxes. Do you think that CRA will call you and say, hey, this is the way to save on taxes? No, they won't call you. But you as a medical professionals must put strategic planning in place to save as much as you can on taxes legally. And I'm talking about legally, right? All I will share today is a legal way for you as a medical professionals, business owner, immigrant to save on taxes. Many work harder each year, yet lose nearly half their income to taxes. Imagine if you are paying as much as 53% on taxes, depending on your province, depending on your income, who are you working for? Right? So CRA may become your legal or major expenses if care is not taken. Lack of proper planning means CRA becomes your biggest expenses. Have you had time to sit down and analyze your financial report, especially your income and expense statement, and see which one has the highest expenses at the end of the year? Did you ask yourself that question? Guys, let me tell you this, right? Your accountant can help you to prepare everything. They can help you to prepare your books of account. They can do everything for you, but they cannot build wealth for you. They can't build wealth for you. I've met a lot of medical professionals, right? When I finish with them, the next thing is I'm going to talk to my accountant if he's going to approve this. If your accountant does not have experience about how to save on taxes, leveraging on these strategies, chances is that he's going to tell you that this is not the right way to go. And do you think it's his fault? It's your fault, because it's you that's supposed to ask for financial advice from professionals that will help you to save on taxes. So one thing that I want you to do again is that don't leave everything to your accountant. Audit yourself once in a while. Scan through your profit and loss account. At least this is a very simple statement that it doesn't really need to give you so much. It's not difficult to analyze that, right? What comes in, what goes out. So check, okay, how much do I make this year? How much does it actually goes out? Okay, where? So that you can pick those ones that you need to work on. So, and I know major expenses that most of the medical professional pays is CRA. It's CRA. So you need to do something about that, right? Let's look at the hidden tax trap. The hidden tax trap. Salary only approach. Drawing only salary from your corporation without considering other compensation method. Now, if you are a medical professional, business owner, or you have any form of businesses at all, right? And you are doing only salary, you are leaving money on the table. Okay, now salary, dividend, all these have their own benefit, so you have to do the mix. But if you are drawing salary, if you take salary, okay, whatever tax you need to pay your accountant, charge that and pay that to CRA immediately plus CPP. It's a very good options, especially for retirement planning. Imagine a medical doctor starts retired between maybe 2-3 years ago and put a lot of money on real estate, and the market just crashed. Everybody knows what is going on in the real estate market, especially here in Canada. So it means that you have shot yourself in the leg. But if you do a little bit of salary, okay, so meaning that a CRA, okay, whatever you remit as pension, they also match it up with some amount, with whatever interest that actually comes out of it. Whatever you put there, government match up with certain amount, and you can also get that when you retire. So at least that will cushion your retirement. So do a little bit of salary, okay? And number two, failing to use the dividend salary mix effectively to optimize tax efficiency. Now, a good way to plan for taxes is to do both salary and dividend. I've met some doctors, they will say, my accountant said I should not do salary. Some will say, my accountant said I should not do dividend, right? So they do either of the two. Guys, you need to do the two. Right, you need to do the two. You need to balance the two because each of them has its own advantage. Ask your accountant. But what I'm trying to say here today is that this is a very legal way to save on taxes. If you take dividend, compare the taxes is a little bit reasonable compared to if you take salary. Okay, but if you take salary, all right, you also get some form of pension. It's either of them, they have all of them, they have their own benefit. Again, the bank will also see the salary as a way to qualify you for some credit facility, like line of credit, like revolving line of credit, like credit card and some of that. So it's also another way to also get qualified for credit facility, because sometimes you may run out of cash in your clinic and you need money. So you must do the two. You do salary, you do dividend. No insurance strategies, no corporate owned life insurance to shelter, retain earnings, and build wealth. One thing that I want you to know is that I've seen a lot of people, they ask me, oh, Fasola, one advisor said that my premium is tax deductible. The answer is no. Your premium in a life insurance policy is not tax deductible, but it's a very powerful way to save on taxes. If you agree, say yes. If you don't agree, put in a comment chat, and I want you to dispute that so that I can answer your question at the end of this presentation. So this is how to do it, bro. So if you set up an insurance on your corporation, okay, the corporation is the payer, the corporation is the owner, the corporation is the beneficiary, but because the money is coming from the corporation, okay, your premium, all right, will enjoy corporate tax. So at the end of the year, there's what we call add back. Okay, your accountant will add all the expenses that need to be taxed back to the financial report and tax it at A normal corporate tax is usually between 12, 13, 14, 15%, depending on your province, depending on your income, right? So you can see, instead of taking salary and pay 40, 50% or dividend, if you put this money in life insurance strategies, you pay about 12%, 10%, 12%, 13%, like that, right? So it all depends on your province. But imagine that, for example, if you save, like, let's say you are paying $60,000 annual premium on taxes, or you are paying $1,000 on taxes from your corporation. So that money enjoy, corporation tax at a ridiculous of, corporate tax of about 12, 13%, as opposed to if you don't set up life insurance. All right. And of course, if it's your retained earnings, you can set up immediate financing arrangement on your holding company, and that is another powerful way of saving on taxes. Passive income penalty, passive investment are taxed heavily within the corporation, reducing growth potential. Look, so the corporate tax is okay, right? Salary, you could pay up to 40, 40 something percent. But when it comes to passive income, is another tax trap. So I want to just encourage everyone that, look, it is your responsibility to learn and understand how to save on taxes. You don't need to be an accountant. You don't need to be a tax expert. All right. At least understand a little bit of how you can plan your life around taxes. Let's look at the three layers of taxation. Three layers of taxation. Tax protected strategy for optimal wealth, right? Corporate taxes, right? So corporate tax is between 12 to 15%, right? When it comes to personal tax, it could be up to 53% taxes, right? So we have corporate taxes, we have personal income taxes, and we have passive income taxes. So each of these taxes has different way of taxation, right? I'm not a tax expert, but I learned this just to understand how to help medical professionals to save on taxes. I've put a disclaimer in the beginning of this presentation. If you want to learn about taxes, go and meet your accountant. I'm not a tax accountant. But by the virtue of the fact that I'm an insurance agent and I understand how you can leverage on some strategies to save on taxes, actually make me to do a lot of research to come up with this, right? The goal is that you want to shift from personal to corporate to sheltered growth, right? These are the smart tax moves for 2025. Number one, incorporate your practice. Establish a professional corporation to assess lower tax rate and strategic planning opportunity. It might sound like, oh, they have known none of this. Trust me, a lot of them don't know this. I've met the doctor and he said, look, they said I should not incorporate until I get my PR. I said, look, it's your incorporation has nothing to do with whether you have your PR or you don't have your PR. If you have a business if you are a medical professional and you are working legally in Canada, you can incorporate. Okay, I'm not in. I want you to know that if you are a medical professional, I've seen a lot of medical professionals, they're on work permit, right? They incorporate because the goal is that you want to save as much as you can on taxes. And one of the smartest way to save on taxes is to incorporate, because incorporation taxes, 12%, 13%, it's lower compared to when you are talking about you're taking salary or dividend. Okay. Blend salary and dividends strategically. Mix salaries and dividend to optimize your overall tax positions. I've said it earlier that you have to do the two. Don't do salary alone. Don't do dividend alone. Do the two because each of them has its own advantage, right? If you are drawing money from your corporation, you're taking dividend. But if you're taking salary, right? So every month, whatever salary you take, you pay your tax, and you also remit some money into your pension, because based on what you pay, based on what you take, they will actually calculate your pension. So it's another opportunity to plan for your retirement. Imagine the market crash when you retire and you put all your money in real estate, in bond, stocks, read, and the market just suddenly crash, and you don't have any other options. So, we are saying this because why? You need to diversify your portfolio. You don't put your egg in one basket. So, maximize fully registered account. Fully utilize your registered retirement savings plan, tax free savings account, FHSA contribution room for tax advantage growth. All these strategies, all these accounts, they are vehicle to save on taxes. If you do RRSP, it's a deferred tax strategist, right? If you do TFSA, it's tax-free advantage account. Because why? The dollar you're putting on TFSA has already been taxed, so you don't need to pay tax on that. If you are planning to buy your first house, it's also an opportunity to also put money on first FHSA. So each of them, they have their own advantage. You need to understand all of that. You don't need to go and learn and be reading about finance or go and become a financial advisor or insurance advisor to know this. You only need to work with advisor that understand your situation and also recommend the right solutions that will fit your need for you. I'm not talking about advisor that just want to sell to you just to make money, right? We have people like that. But if you meet correct advisor, right, they will show you, right, what you need to do, how to save on taxes without selling anything to you. All they need is to educate. I'm not here to sell anything to you. I just want to educate you. All right. You have your financial advisor, you have your insurance broker, right? Go and talk to them. Like, this is what here today, right? Am I doing it? Am I optimize all these tax advantage account, right? Do I do the right thing? Do I actually put up the right strategies for me to plan for my retirement? You need to ask questions. You need to audit your finance. You need to audit your investment to know which one are actually putting money. There is a trending news right now where CRA slammed a family with $660,000 because their parents died in 1 year. So imagine, they put a lot of money on RRSP, they put a lot of money, they have money on cottage, and when CRA calculate all of that, right, they send a bill of $660,000 for them. So do you think CRA did bad thing? No, because it is their fault not to plan and work with advisor that will advise them on what to do. So guys, I'm saying this today because why? A lot of us are putting money on the table. We are putting our money in a wrong vehicle that will trigger a lot of tax dispositions at the end of the day. So I just want everybody to understand that education is very key. Financial education is very, very important. If you don't know, it's not an excuses. Like you tell also those people right now, they want to, if they contest, they will tell you, say, look, this is the law, because it's law, right? Keep surplus funds inside your professional corporation for strategic investment. Do you know that your corporation is also an investment? Is a wealth building tool, right? Especially if you have a holding company. I've seen a lot of medical professionals, when you tell them what is holding company, they say, what is holding company? So you have to talk to your accountant. So when you have your corporation, so you have another vehicle that is called a holding company. The holding company is another vehicle in which you can use to invest your retained earnings. The profit you make from your corporation, you put it on the holding. By default, holding company does not have any activity. So, but the money you make from your corporation advantage. Now, use corporate owned life insurance like whole life for immediate financing, arrangement for growth, and tax protection. So, this is another powerful strategies that you can use to save a lot of money from taxes. You call it insurance, well, whatever name you call it. Some doctors doesn't want to hear this, but the truth of the matter is that if you don't do all what you need to do, you'll be putting money on the table. We're going to talk about that, right? Let's look at the immediate financing arrangement strategy. So, number one, you fund life insurance through premium through your corporation. So the premium is coming from the retained earning. Okay, it's coming from the retained earning. There are two ways to set up life insurance, one on your corporation, one on the holding company. Okay, it depends on your situations, but care must be taken. If you want to implement immediate financing arrangement, you must have enough retained earnings. Your company must be making enough profit every year consecutively, because why? The money is coming from the retained earning, and it's a lot of money. So imagine some if you make money this year, the following year you don't make money, third year you make money. So we cannot implement immediate financing arrangement in that way. So we have to look at your financial report, look at your balance sheet, look at your cash flow statement, look at your profit and loss account to know whether you are qualified. It's not like I want to do it, you must qualify for it. So it's not like, oh, I need to set up immediate financing arrangement. No, we cannot do that. You must qualify. Even if you have the money, you must still qualify. So if you want to qualify, book a call and let me show you how you can qualify. Okay, and borrow against the cash value and the premium, right? So you borrow against the cash value for tax-free access to capital. So one problem that many people face about life insurance is because they do not have access to immediate cash, right? But with immediate financing arrangement, you can have immediate access to your money, let's say from year 2, year 3, right? Depending on the way they set it up, depending on the arrangement with the financial institution, because there's lot of paperwork that goes into this. There are a lot of things that we have to consider before we can say, okay, this one is actually good for immediate financing arrangement or not, right? So I've done a lot of videos on, you can go and check how to borrow from yourself, never the bank again, the immediate financing arrangement strategies on my channel, right? You can go and watch that, right? So the third one is deductible interest, right? Interest on the loan is often tax deductible. So look at it, right? You need to be very, very wise, okay, when it comes to saving on taxes. Now you set up immediate financing arrangement. So because you are not paying taxes on, because you are borrowing against your premium, you are borrowing against your cash value, instead of you to pay taxes, you are paying interest, and that interest can still be written to your profit and loss account at the end of the year, still reducing your taxes. So it's just a smart way of saving money on taxes, right? Triple benefit: protect assets, reduce taxes, and grow wealth simultaneously. Now, if you are making money, if you are building wealth, and there is no proper estate plan in place to make sure that that money continues to grow, you are building nothing. Yeah. So imagine you work so hard, but you don't have a exit plan. You don't have any strategies in place to make sure that that money continues to, work from generations to generations. And I want you to go and read Rockefeller's Strategist, the waterfall model. Rockefeller said, and I quote, said, "I want every born Rockefeller family not to experience any form of poverty in their life." Can you say that to your family? Can you say that to yourself, that I don't want any of my children to suffer? A lot of us, when you tell them come and set up a life insurance, no, my dad did not do anything like that for me, so I brought them to Canada, they have to go and fight for themselves. You are being weak. It's wickedness. It's just you don't care about your family, and it shows that you don't love your family. Now, your parent didn't do it for you. Must you now continue to do that for your children? Do you want that poverty to continue? Insurance will give you money you don't work for. That is as simple as ABC. I've seen somebody said yesterday that somebody I was saying on the internet that no, they should not do life insurance, that the only insurance they can do is car insurance. It's lack of financial education. You can't blame them. I said, I can't blame them, because why? They don't understand financial planning. So if you see anybody who does not understand financial planning, he will not understand the reasons why he needs to protect himself and the family. We have seen that. I've seen many, many cases of sickness. Just one sickness, just consume all the savings within months. It happens. And we're not scaring everybody here, but we are telling you, everybody, the truth, that financial planning is very, very, very important. If you don't want us to continue to spread poverty from one generation to another generation, it is very important for us to plan, not only set up life insurance, but set up in such a way that it will continue to generate income, cash flow to the family. Imagine you set up a life insurance and you create a trust on that life insurance, meaning that you put up a constitution that when I pass, this is the way I want to spend this money. This is where I want this money to go. That is what estate planning means. We have a lot of us are protecting assets, but we don't preserve it. There's difference between estate preservations and estate protection. I've done a video on that. Go and check it on my YouTube channel. So this is an example of Dr. Jane. Dr. Jane, before the implementation, is actually making about probably $400,000 in a year and about $180,000 going to taxes. Imagine that. Imagine that. After added corporate life insurance plus immediate financing arrangement strategies, it's actually the taxable income, and we are able to build $2 million in tax-free cash value for retirement. This is what we have done for. I did it for one of my clients here in Toronto. If you don't know, you don't know. If you agree, type yes on the comment section that I agree. So building the doctor's family bank. This is another powerful strategies for building generational wealth, right? Corporate life insurance, turn your policy into a family bank. How many of us know that you as an individual, you can create your own family bank through your life insurance? If you agree, say yes. If you know, say yes. If you don't know, say no. Put it on the comment section. Because this is what is really happening right now. And that's what Rockefeller did, right? So you can actually do that. So instead of you to make the beneficiary of life insurance the children or the spouse or whatever, you can actually set up the life insurance and let the beneficiary be the trust. So when you create a trust on the life insurance, what you are simply saying is that you are giving instructions on how that money is going to be distributed. If you give it to an individual, chances that they will not follow your instruction. And that in that way, they can continue to create generational wealth. Access cash through policy loan, right? So there are various ways in which you can access money from your life insurance policy. If you want to learn more, book a call, right? Wealth transfer, pass well to here, tax-free, no probate, no capital gain. So one thing that is also happening in this part of the world is that if you die without a will, if you die without a plan, government has one for you, and it's always expensive. If you have a house, you must have a will. Any property whatsoever, you must have a will, because if anything happens, the government want to assess that, and if they will ask, do you have any instruction in place on how this, because they are going to, especially when it's going to trigger taxes and all of that, government will ask. Support education, real estate, or other investments. So you can actually use your family bank to build generational wealth. Key takeaway: legal tax reduction. You can legally reduce your tax through smarter structures. Okay. Your professional corporation is your part tool, right? Your professional corporation is a powerful tax tool. If you have not incorporated your corporation, please go and do that ASAP. I mean ASAP. Immediate financing arrangement plus insurance. Leverage immediate financing arrangement plus either whole life or universal life insurance for growth and protection. And smart planning, smart tax planning. Keep more, grow faster, retire early. Do you know that you can actually grow your wealth faster by building these strategies, by following this strategy? Keep more of what you earn. Thank you so much for your time today. I want to appreciate everyone for joining these sessions today. It's been a very amazing session. If you have any question, you can actually put it in the comment section so that we can both look at it. If you have any question, please. Any question? Wow. On behalf of the Wealth Building Conference team, I want to appreciate everyone. If you want to learn more about, because working with medical professionals, I've really opened my eyes on the smart way of helping them to save on taxes. A lot of us, we don't really have this knowledge, we don't really have this understanding, and it is very, very important that we learn and understand how to save them. They're paying more on taxes, and they are crying for help. A lot of them, they are struggling. They are really looking for help. So, but imagine if you have, if you have opportunity of learning and open their eyes to see. If you are in this training today and you know any medical doctor, share the link with them. Right, they are, if they are your client, let them set up, let's set up a meeting with them and say, let's audit your investment, because it's your responsibility. Like I said, the accountant cannot do that for them. It is you, it's they rely so much on your expertise, they rely so much on your skill, they rely so much on your experience. So please share this with them and let them know how to save money on taxes on behalf of, once again, Wealth Building Conference. Thank you so much for joining. We're going to start I'm going to announce that maybe next week on, where we are coming up with a challenge for the licensed insurance broker, especially for those of you, for those who are actually struggling how to generate lead, how to scale their business. We are coming up with training on that. It's going to be massive, guys. It's going to be massive. I'm super excited to share this with you. So I want to say thank you so much. So enjoy your weekend, and see you next week. Bye for now.